And it's the last day of the month of August. A good time to take stock as the Ember months begin. Welcome to Business Morning. I'm Ladi Williams.
Good morning and welcome. I'm Ini John McQuarwell. Just before we delve into the show, let's start with updates from the world of business. The Central Bank of Nigeria has formally engaged a global fintech company, Bit Inc., as a technical partner for its digital currency. The CBN had mentioned that the digital currency called e-Naira would be unveiled by the 1st of August. The CBN Governor, Mr. Godwin Emefiele, has been outlining the benefits of digital currency to include increased cross-border trade, accelerated financial inclusion, cheaper and faster remittance inflows, and easier targeted social interventions. This is very interesting.
E-Naira.
Yes, we can see that the CBN is very serious about this, and we're really looking forward to it.
Partnering.
Yes,
with,
we've discussed this to us. Is it going to be an alternative currency, or is it going to be an investment platform? I think these are some of the things that the CBN still needs to outline.
We need to actually discuss that because we cannot trade e-Naira. They said you can't use it to buy Bitcoin. They've already, pointed that out.
No, because there are two competition. I mean,
exactly.
You can connect both of them.
So to just be for cross-border payments.
Cross-border
that's what
payment,
I'm thinking.
but can it also be used as an investment platform? You know, the way
you trade
crypto,
and trade forex. Who knows? That might actually come up at some point.
So the CBN needs to clear the
air. Need to clear the air on that.
Those.
Well, the outgoing Statistician General of the Federation, Dr. Emikale, has charged his successor, Mr. Simon Harry, to maintain the trust the public has on the National Bureau of Statistics. Dr. Kale, who gave the charge at the official handover to the newly appointed Statistician General of the Federation, Simon Harry, explains that it was necessary to always strive to protect the hard-earned public trust the Bureau currently enjoys for official statistics. Dr. Kale is also canvassing for the operational independence of the Bureau to enhance its functions. He was appointed to the position of the Statistician General in 2011 for a 5-year tenure and was reappointed in 2016.
Trust in the Bureau's work is what gives the Bureau its authoritative voice on several issues of national importance. We must continuously and jealously guard this public trust. The second principle is closely related and will help to achieve the first. It is protecting the operational independence of the National Bureau of Statistics. Where this independence is compromised, curtailed, or sacrificed, it raises the perception as the quality and reliability of our data products. And over time, users lose trust and confidence in data producers, effectively, once again, rendering the Bureau irrelevant. It is my sincere wish that you will continue to do whatever you can to preserve the public trust and protect the Bureau's operational independence, knowing how fundamental it is to the very existence of the Bureau and its mandate.
Oh, you're welcome back. Oil prices slipped today amid concerns that power outages and flooding in Louisiana after Hurricane Ida will cut crude demand from refineries. At the same time, global producers plan to raise output. The prices were also weighed down by weaker manufacturing data from China, where factory activity expanded at a slower pace in August compared with the previous month. U.S. West Texas Intermediate crude futures were down 5 cents to $69.16 a barrel, reversing some of Monday's gains. Brent crude futures for October, due to expire today, were down 3 cents to $73.38 a barrel after gaining nearly 1% yesterday. The more active November contract was down 3 cents at $72.22 a barrel. Market players are on sidelines ahead of OPEC Plus review meeting, which is tomorrow. Hurricane Ida knocked out at least 94% of the offshore Gulf of Mexico oil and gas production, caused catastrophic. Well, the loss of power could last for 3 weeks. Utilities officials slowing efforts to repair and restart energy facilities, which could also take at least 2 weeks to fully resume operations. Well, how is this affecting commodities market? We have Adeshola Sumoni, research analyst with financial derivatives, joining us from Reading in the United Kingdom. Hello, Adeshola. Good to have you.
Good morning, Ini. Thank you for having me on the show.
Good morning. So oil prices slipped again. Hurricane Ida weakened, though. But what other factors are driving oil prices? I mean, the threat of Ida should be waning now, so we should expect things coming back to normal.
Thank you for that question, Amy. So, like you said, we had the Hurricane Ida, which really devastated Louisiana, and it took off around 6 refineries offline, which contribute around 12% of the US's refining capacity. So all of that is online. Then we have the flooding, we have power outages, and all of this, this is affecting the demand from the refineries, as you rightly mentioned. In addition to that, we are seeing weaker demand from Asia, because of rising coronavirus cases, the fourth wave in some key economies in Asia. And in addition to that, we expect that, OPEC would release another 400,000 barrels of oil into the market starting tomorrow. So all these factors are weighing on oil prices. In the near term, I expect that the power shortages and the production shut-ins in Louisiana should be resolved in the next couple of weeks. But the more oil coming from OPEC, I think that should keep prices that would weigh on prices. So in the near term, I expect that oil prices will range between around $70 per barrel to around $73 per barrel.
Okay. The speech by Jerome Powell also affected, global stock prices. We're just getting stabilized yesterday, but everything seems to rise and fall on the happenings in the United States.
Yes, you're absolutely right. I mean, at the meeting on Friday in Jackson Hole, even though it was a virtual meeting, J. Powell, signaled that the U.S. would start tapering down, their assets purchasing program, setting the pace for change in the monetary policy stance. But again, the U.S., because of many of these commodities are denominated in U.S. dollars and also are denominated in U.S. dollars. So definitely changes. Whenever, for instance, whenever the U.S. dollar strengthens against a basket of currencies, all of these commodities suddenly become more expensive to holders of other currencies. Also, when the U.S. changes the interest rate, or when they increase the interest rate, for instance, it affects the risk appetite, and we see capital flight from the risky assets in emerging markets towards so the riskless assets in the United States.
All right, so we see that even in China now, there's a weaker manufacturing. The data shows that there's weaker manufacturing, weaker than expected. And of course, we know that China has a major impact when it comes to oil. They are the second globally, most consuming country. With this, seeing this now, and of course they are still dealing with the issue of the variant, the Delta variant, how should we expect them to impact the prices?
It is denting all demand, right? So because, like you mentioned, China is like one of the largest buyer of or consumer of crude oil. So obviously, as they have, this fourth wave or a rise in Delta variant of coronavirus, we are seeing travel restrictions, we are seeing canceling of some huge events, and all of this is affecting oil demand. And so all of this is affecting oil demand essentially, and it is weighing on oil price, and that's why we are seeing oil prices slide a little lower.
All right, so
but I think overall the market is still under supply. So even though we see oil prices sliding, it is not passing the particular threshold. Oil prices are still remained above $70 per barrel in the recent months.
Okay, we have a countdown to OPEC's plus scheduled meeting tomorrow, 1st of September. What is expected? What do you expect will be the outcome, from this meeting?
The general consensus is, despite, pressure from the United States, is that, that they will maintain their planned production course. So the consensus is that from tomorrow, they would increase output by 400,000 barrels a day up until the end of the year, despite pressure from the United States and whatnot. However, a senior spokesman from Kuwait has mentioned that OPEC could reconsider that, given the slowing oil demand growth, particularly with the rising cases of Delta variant in Asia, that that is affecting oil demand growth. So the Kuwaiti representative suggests that OPEC may halt, its planned production increases, but I do not think that is likely. I think that they will maintain their planned production increases.
All right, I'm back in Nigeria. The NNPC has incurred 756.99 billion naira in petrol subsidy within 7 months. And now when we talk about the price of petrol or the price of oil, fluctuating with all of the factors affecting it, and then we look at our own scenario with the subsidy, how is this affecting us?
I mean, it's just a pity that Nigeria is such a huge oil exporter, but we still import PMS. And because we import PMS, we're always going to come back to this situation. Also, because we do not have refineries that work, at least at the moment. And like you said, this over $700 billion has been spent on the recovery. And I think that has two implications. One, short-term implication is that at least the price of PMS at the pump is still around 165 or 163 naira per liter, depending on where you buy it. So that is a source of short-term comfort for Nigerians, especially given high prices of everything and inflation still at record levels. So that's the short-term benefit. But in the longer term, this is money that 750 billion naira is money that could be invested in the trade-off. What I'm saying is that the trade-off is huge. The opportunity cost is huge because we are giving up roads that could be built that has huge multiplier effects. We are giving up hospitals, we are giving up paying doctors are on strike and whatnot, and many of them are fleeing the country for the reasons that we all know. And so all of this, I think just the opportunity cost is huge. And I think that, last time we spoke, the government they are working to renovate the refineries, also the Dangote refinery. I think is expected to come online before the end of the year. So I think that if and when those refineries begin to pump oil, then it will reduce our import bill, and then would probably be able to save these monies and use them for other productive uses.
All right, still on the global commodities market, aluminum prices have increased by 33% to a decade high of about $2,650 per metric ton. Take us through developments in the market and your near-term outlook.
Two key factors are driving aluminum at this time. And one is, because aluminum has many uses, from your beers to your electric cars, to your batteries, to construction, to airplane. So as the global economy, picks itself up from the crisis it suffered last year, there's huge demand coming from all of these fronts. And that is really, we are seeing, the demand for aluminum increase at breakneck speed. But at the same time, we are seeing supply challenges from China. China is by and large the biggest supplier of aluminum globally. So we are seeing some supply issues coming from Yunnan province in China, which accounts for, I think, 1/5 of the total output in China. And also recently the Xinjiang region in China is also having some supply shortages. So all of these shortages amid huge demand for aluminum is skyrocketing prices to record levels. I mean, we're seeing prices at levels we've not seen since around August 2008. And I think that this market situation is likely to persist in the near term. And I think the pace of growth of aluminum demand will continue to outpace the supply, at least in the near to medium term, at least up until the end of the year. And because of that, aluminum prices are likely to remain elevated.
So take us through developments in the domestic commodities market.
Okay, so for the domestic commodities market, it's a mixed bag, really, of positives and negatives. So because we are in the harvest season, and harvest season is usually associated with increase in supply, we are seeing the price of some commodities are reduced. Commodities like tomatoes is down 22% to 27,000 naira for a 50 kg basket. We are seeing a medium-sized new yam, the price of a medium-sized new yam also down 33% to 1,000 naira. We are also seeing the price of a 50 kg bag of gari down 4.5% to 15,000 naira. On the other hand, for the import-based commodities such as flour, we are seeing a sharp increase in price, around 29% to 21,000 naira for a 50 kg bag. And also for sugar, we're seeing this price increase 21% also to 22,950. And this is definitely driven by exchange rate pass-through effects. But for other commodities, we are seeing them flat. We are seeing palm oil flat at 19,000, rice, 50 kg bag of rice flat at 27,000. We are seeing beans also flat at 40,000. Cement, pepper, all of them also remain flat. So it's a mixed bag, really.
All right, looking at the downers now, we see electricity price hike set for tomorrow, and also cooking gas, price of cooking gas. What's going on there?
So the Nigerian Bureau of Statistics releases this cooking gas price watch, right? And they showed that the price of a 5 kg, what's the word now? A 5 kg cylinder of gas increased 3.5% month on month in July to 2,100 and around 8.6% year on year. For 12.5 kg cylinder, it also increased. And the next question we are thinking about is why are we seeing this increase in the price of cooking gas? Well, for us to answer that question, you need to understand the way it works. So Nigeria has huge cooking gas reserves, and the main company that produces cooking gas in Nigeria is Nigerian Liquefied Natural Gas Company, right? And unfortunately, the LNG, Nigerian Liquefied Natural Gas, produces gas basically to export it. So it exports around 80-90% of the cooking gas or the natural gas it produces, and only supplies the domestic market 10%, right? And the demand, local demand for cooking gas increased recently and reached, I think, around 1 million metric tons. So we are seeing this huge demand, but domestic supply is quite small. And so the gap is filled with import. So we import the cooking gas. We import a significant portion of the cooking gas. And the thing with imports is that it's vulnerable to exchange rate changes. It's vulnerable to international prices. And those are the factors contributing to the high price of cooking gas today. In addition to that, we are seeing the reimposition of the 7.5% VAT, which is a consumption tax, and which is also contributing to the higher prices. On the impact on consumers, obviously, as the prices are higher and because of, it is a relatively elastic commodity, we are seeing people shift towards cheaper alternatives. Unfortunately, some of these cheaper alternatives are not environmentally friendly. We're talking about charcoal, we're talking about kerosene, we're talking about wood. Right. And it's also reducing purchasing power of the average Nigerians.
Yeah, that's more pressure on disposable income. Anyway, we'll have to leave it there. Desola Sumoni, Head Research at Financial Derivatives Company. Thank you so much for your time.
Thank you for having me.
All right, we'll take a moment now. Business Morning continues in a moment. Just stay with us. And now to our next conversation. The Nigerian Exchange turned 60 last week and started the conversation around that during Capital Market on Saturday. We'll take it further with the Chief Executive Officer of the NJX, Mr. Temi Popola. Great to have you on the program. Good morning.
Good morning. How are you? Thanks for having me.
Fine, thank you. So, Nigerian Exchange Group began as the Lagos Stock Exchange, with the first day of trading being 25th of August, 1961, with 19 securities to over 300 securities now. How would you describe this 60-year journey?
I think, as to any sort of subject, and let me just ask you to forgive my voice, struggling with a little bit of a cold.
That's fine.
But with any subject like this, where you have an opportunity to look back in time, 60 years, indeed, if you look at our nation, there are a few companies that have that sort of history and legacy. So perhaps the way I think about this moment is from two lenses, really. One is just the heritage, I would say, that comes with this richness of this time, and the other is the history. If you think about the heritage, I would say that when you think about the norms, what I'll call the traditions, and just the general approach to financing and to capital markets that we have as a nation, it's very difficult to divorce the exchange from that set of norms and beliefs. So I think that's a testament in itself. And then, of course, the history, 60 years as an institution. In that time, there's been quite a few cycles that we have witnessed. But to your point, there's a very strong track of growth, whether that's growth to the number of securities listed, to the types of securities listed, and the types of business activity that the institution does. I think it's certainly a time that gives us, again, this pause to look back in time and to be thankful for all of this.
30 exchanges in Africa, Nigeria ranks about third after Kenya and South Africa. What can we adopt from these two exchanges?
Maybe I should ask you to please clarify when you say it ranks third in terms of what, please?
I mean, even recently, Kenya was applauded as the leading exchange on the continent. And then South Africa, yes.
Okay, thank you for that question. There are several things through which you can look at exchanges, and I wasn't quite sure what you meant. Traditionally, you would look at what is the market capitalization, for example, in the exchange, which would throw up a different kind of ranking. And there's a host of other things that you can look at, but I'll try to address the question really if it's around, what can we as an institution perhaps adopt as we look around us in the continent, as we look around us outside Africa to other leading exchanges. I would say that really it's to continue to build on what it is that we have at the moment. And those are things around just increasing access to, call it financial sort of exposure for citizens of the country. It is the ability to help corporates, to help the government to meet a lot more of their objectives. But by and large, I think that the exchange, NJX, if you look particularly across Africa, certainly stands tall, I would say, across most of the exchanges vis-a-vis the current dynamics of the nation.
All right, so in recent times, we've seen a change in the composition of investors from being majorly foreign to domestic. What advantages come with this?
Thank you very much for the question. I think indeed it's a testament to what is the, call it, financial power of Nigeria as a whole. To your point, the specific numbers are around somewhere from 60% of what used to be a foreign investor participation in our core equity markets to what is now about 20%. I need to say, of course, that this figure can be very cyclical. Foreign investors will typically move with what I call the ebb and the flow of capital across particularly frontier markets. And that's what that current trend shows at this point. But one of the things that this demonstrates is that there's been a lot more, breadth to the type of local investors that we see in our market. Historically, you saw just the institutional investors. Today, on the local side, you're seeing more retail investors. You're seeing more family offices do business on the exchange. And indeed, you're seeing more corporates, even though they're local corporates, is what makes up a lot of this. So for us as an exchange is really to ask ourselves how we can build on this local increased participation, but at the same time, make sure that as the cyclicality of the foreign capital continues, we are positioned to attract that when some of the, I would say, macroeconomic type situations improve.
And the demutualization of the exchange has been described as a major leap in the right direction. Is it too soon to counter benefits?
I don't think it's too soon, actually, because first and foremost is the fact that the demutualization was several years and perhaps decades in the making. And I think for the benefit of the viewers, the simple way to think about the demutualization is that it essentially allows the exchange, which now you can call it made up of 3-4 companies. What you would find is that the sum of the individual parts of these companies will be bigger than the whole. So when you look at the core operating exchange today, that will now have a much higher commercial focus and ethos, the ability to separate that intention from the other very important responsibility of regulating the market, then I think would help to achieve what is this reason for the demutualization. And then, of course, tied to that is the ability to attract new partners, whether those are strategic partners, or whether they're financial partners, really to help the exchange achieve a lot of its long-term goals and objectives.
All right, the issuer base of the NJX, has been described as being too narrow and concentrated. Like, 7 companies control about 70% of the market cap. Any plans to expand the base?
Okay, it's a good question. I think first and foremost, I should say that if you look at any business, if you look at any sector, you will typically have what is your 80-20 rule, which is that there's typically a 20%, that tends to control 80% of the activity. So I think that's what you're speaking to on the exchange. But nonetheless, it is indeed true that we can do a lot more to diversify what appears to be a core set of companies that account for the market cap of the exchange. And yes, we are actively working on this. I think as time goes on, you would find this to be a lot of the investments that we're making as an institution to try to address this. And a few sectors, in my view, are pretty apparent that we need to put a lot more emphasis on. If we look within technology today, we will see a lot of capital formation happening as a nation, and indeed it's one of the very bright spots today for us in the capital markets and financing part of the nation. So the exchange would be spending quite a bit of time and energy to situate itself within this ecosystem. And then, of course, the other way to think about this question is to just think through what are the things that make up the GDP of the nation. And what parts of those are not sufficiently represented on the exchange. Agri will be perhaps a notable example of that on top of the technology I mentioned. And then, of course, things like real estate. But the approach and the path to getting these represented requires certain different types of strategies for each sector. But I consider this is certainly top of mind share and priority for the management as we go forward.
All right, and what are the plans to digitalize the market to a point where investors can buy and sell shares easily? Talking about mobile platforms, because a lot of people have talked about the bureaucracy or the long process to actually access shares.
It's a very good question, and thank you for raising it. In fact, you'd find that it's sometimes easier as a local Nigerian with a local bank account to get exposure to foreign securities than it is to get exposure to Nigerian equities. In Nigerian, call it financial products. I would first of all start to say that the apex regulator is taking a very, very strong lead in trying to address this question. And the exchange is certainly also partnering to the extent that we can to make sure we support this initiative. And another simple way to think about the objective there is that similar to the banking system, where you can, in the space of minutes, start to transact in a financial bank account, what would it take for the capital markets to get to this sort of a place? And I would say that a lot of work is being done on this. Of course, as you would imagine, if you understand the way that the structural makeup of our markets is that there's several people and several institutions that are involved with that process from start to finish of trying to transact. And that coordinating effort is certainly important. The exchange is doing its bit in that. As I said, the regulator is also taking a lead in this. And I think certainly I can say that over the course of the next few months, we are hopeful that we will see some really, in my view, structural changes in the positive direction that helps to address this, because until we can do this, and if you think about also the makeup of the Nigerian sort of demography, most of the next generation of investors are typically on their mobile phones, and until we can meet them there with a sort of products, then we still have a lot to do, which is a lot of the activity that's going on at the moment.
All right, in terms of policy making, which affects activities on the market, what are some of the key reforms you believe industry practitioners are looking out for, and how can the NJX, facilitate some of these?
Thank you again for the question. I think there are a few ways to look at this. If you think about just the core activity of the exchange today, we are in the listing business, which is how do we get corporates to raise capital through investors on the exchange. And then, of course, there's the, call it trading part of that, the secondary part of that, how we provide enough liquidity and opportunity for investors to transact and trade on their shares and securities. And if you think about policy, there's a lot of policy work that is needed for both of these, what I call core traditional pillars. So, for example, we look at the primary market activity. Many people will tell you that perhaps our listing rules perhaps need to be revisited, perhaps now also, and particularly now after the demutualization. So there's going to be a lot of policy work to be done there to really ask ourselves, now in sort of the way capital is being formed, are there rules, are there changes to our rules that can be done? If you think through on the secondary part of the activity as well, there are lots of policy-related things. One we just spoke about, to really unlock through technology and do this democratization of finance. It does involve quite a lot of policy changes that the exchange will be looking to champion. And then, of course, away from all of these, what I call more macroeconomic type policies that are not necessarily in the direct control of the exchange, that we will be working with, other regulators and working with lawmakers around. These would be everything from tax policy to things around more macroeconomic variables that, again, the exchange is not in control of, but certainly will be doing its part to smoothen and to make sure that we get across the line.
All right, Mr. Pokwela, just before we let you go, what's the plan to boost or attract more foreign capital into the exchange?
Okay. This is certainly goes back to the point I made. There are certain things in this that are within the control of the exchange. But also fair to say that there's quite a bit also that's outside the control of the exchange when we talk about attracting foreign capital. First and foremost, the way foreign capital flows is that it does not like resistance. I'm sure most people would appreciate that. And also is that capital is very fungible. So a lot of the foreign capital that comes in really starts from what I call a top-down sort of analysis. They would sort of look at the region, look at the continent, look at the country, and decide to allocate capital. So those sorts of decisions tend to be more around the economy, broadly speaking. But away from that, of course, investors also look at the quality of the companies and the quality of the investments that they could make. This is the reason why you would find that the exchange is very big on governance, as an example, and upholding the laws and the rules and the regulations that govern the activity on the exchange. And then, of course, there are more operational things. When investors transact in our markets, how easy is it for them to settle transactions? How easy is it for them for sort of complaints and issues to be resolved? And how do they find what I call the infrastructure in our market, the intermediaries, the custodians, as an example, that many of them will transact through? These are things that are within the exchange's control, and we are spending quite a bit of time to make sure that we make all of that conducive enough. But important to say, as I said earlier, that a lot of the time, the overwhelming sort of factor as to attracting foreign capital tends to be more macroeconomic in nature.
So while we celebrate the 60 years, what's the outlook for the next 60 years? Let's say 60 years.
60 years or 60 days? I think that question certainly is one of the sort of questions that gets me very excited as I think about the future of the exchange. I spoke earlier, for example, to technology. It is very exciting what is happening within the technological space within Nigeria as an example. So I think no one really can sort of wrap our minds around what that would look like in 60 years. But one thing I can tell you is that in 60 years from now, you are having an institution where, just the idea of raising capital through shares is just one part of what we will be doing. There would be several other forms and means and ways of raising capital. And the exchange of the future certainly will continue to evolve and will continue to innovate to make sure that we can attract that. Of course, I should also state that the exchange itself is a company. And so the exchange of the future is a company that, colleagues and employees should find to be a worthy place to work, to build a career, to grow. And ultimately should be an institution that really does help to drive what we see as economic growth in Nigeria. We do think very strongly so that the future economic growth of the nation is very tied to the success of the capital markets. And it's our responsibility as the exchange to make sure that the capital markets are strong, that they're vibrant and on very strong foundations. Thank you.
All right. Thank you so much, Mr. Temi Popola, the Chief Executive Officer of the Nigerian Exchange Group. And congratulations. We certainly look forward to the next 60 years in good health and more celebrations. Thank you so much and enjoy the rest of your day.
Thank you very much. Cheers.
And talking about the NJX equities market close, well, in the negative yesterday. I guess it's not looking at the 60th anniversary that we are celebrating. Aniti.
Yes, good morning, Enid. 60, that's what we call the Diamond Jubilee. And of course, diamond is always a very nice color. But of course, the market chose a different color. This time it was red. And of course, that's about 83 billion naira loss recorded on the first trading day of the week. And of course, we are entering the last trading day of the month today. So, but let's take a look at how the market closed yesterday. The market was down 0.40% yesterday, as a matter of fact, due to profit taking from 18 equities, the likes of Dangote Cement, the likes of Zenith Bank, GTCO, Access Bank, Fidelity Bank. Of course, they were the ones that dragged the market back into the red by a deeper margin against what we closed at on Friday. And then, of course, when you take a look at the sectoral performance, broadly mixed, but mostly negative. Especially the banking, industrial goods, as well as the oil and gas counter. And then, of course, for the value, for the activity chart, it was still mixed, but mostly negative value of transactions. Now, to tell us what happened at the market, let's speak with David Adorin, who's a stockbroker at High Cap Securities today. Thank you for joining us, David.
It's a pleasure. Good morning.
Yeah. Okay, so the markets, it's another negative or return to negative trading. So are we going to attribute this to end-of-month effect or rebalancing of portfolio or a cautious sentiment on the back of investors? Can you tell us about this?
Okay, we'll just see the event of yesterday just as normal forces of supply and demand dictating the state of the market is not something to actually hold on to, because the month of August was very, very good for the capital market in general, because within the month of August alone, the equities market appreciated by over 2%, reducing the year-to-date loss to about 1.95%. And then also the bond market appreciated by about 1.58% within the month of August. So what happened yesterday may just be a little deviation from the pattern that we have observed throughout the month, because the second quarter results, which were very impressive, hit the equities market. in the month of August, and prior to then in July, with very good dividend payments by several blue chip companies. And then the impressive performance of the market in general in August arose from improving macroeconomic conditions like the rising GDP rate and the declining inflation rate. So all the macroeconomic factors were pointing positive. For instance, the crude oil price was high and stable. And then with the negative yield on bonds, the equities market enjoyed favorable patronage within the period. So it was a very good month, and I believe that today is likely to round up strongly too, even if it does not end up positive.
Okay. Okay, so David, now... okay.
Yeah.
No, I wanted to ask you that we had quite an increased number of volume of transactions yesterday. And then, of course, the second quarter earnings season is almost winding down because once we enter the month of September, we will be looking out for the third quarter results. So do you see any, what are the stocks to look out for as we enter the last trading day of August and into September?
Yes, the macroeconomic condition of the country is improving, and so that is likely to impact the fundamentals of the capital market positively. And the good thing really is that we have the capital market that is like a candle that is burning at both ends. Both equities and debt are forging ahead, as a result of which one would reasonably believe that the recovery in the capital market, both equities and debt, should continue in September, because debt too would also be attractive because the federal government will have reasons to come forcefully into the debt market to issue more debt instruments, while the fundamentals of the economy, as they improve, will attract investors to more risk-bearing activities, which will impact positively on equity. So September is projected to be a month of further recovery.
David, thank you for that. For letting us know what to expect in the month of September. Thank you, David. That was David and Doreen, stockbroker at HighCap Securities. So now let's flip over to the fixed income market. Also, at the fixed income market, bullish sentiment, particularly for the bonds market, the treasury bills market, as well as the open market operations. So, Ini, I don't know what your take is, but I'm still optimistic for a positive close for the month.
Yeah, I am too, and I truly hope that today, being the last trading day in the month, that's last trading day and the last day in the month anyway, that will have a positive trade. But thank you so much, Anita. We'll now take a break. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Channels Television. Welcome back. We're going to London now, and it's back to the studios. Juliana is standing by. Hello, Juliana. Good morning. Good to have you back in the studios.
Good morning, Annie. Nice to see you.
Good to see you too. Well, the Lloyds Bank Business Barometer shows that employers in England's northwest and east registered the biggest jump in confidence. What more can we glean from the reports?
Yeah, this is a really good, positive set of data released by the Lloyds Bank Business Barometer, which is a monthly survey speaking to about 1,200 businesses across manufacturing, construction and services. And as you said, in August, they've posted positive highs not seen in a few years. And lots of the company managers are citing the successful vaccination rollout, the removal of lockdown restrictions and the change in staff having to self-isolate. So it's really good good, really positive, certainly for the month of August, because as you know, the flash PMI data that we received last week does yet again show that in Q3, growth is starting to slow here in the UK. Coronavirus, as everybody knows, hasn't gone anywhere despite the successful vaccine. So consumers here in the UK are a little bit cautious about spending their money. There have been lots of festivals over the weekend. Lots of youngsters are going out, but the ones with most money in their back pocket are keeping it in there. But as you said, this survey, this data, the fact that it has increased 6 points month on month does show that businesses are getting cautious, are getting confident again, although caution does remain due to inflation, the fact that the furlough scheme is coming to an end tomorrow, and there are still supply chain bottlenecks which are causing some delays in getting some products on the shop shelves.
And Ofgem has launched a £450 million fund aimed at innovative projects that will help the country meet its net zero climate target. How is this fund expected to be utilised?
Well, yeah, this fund is going to be used by Ofgem, which is the energy regulator, over 5 years. As you said, it's £450 million, which is a lot of money. But Britain has, set the scene to be one of the strongest economies in the world, to be net zero by the middle of the century. And the only way that they can do that is by piling lots of money into really innovative projects created by the best minds. And that's what Ofgem do. In terms of net zero emissions, the British government are focusing on 4 areas: heat, housing, digitalisation and innovation. And with the energy regulator, they're really focusing on how they can change the way people heat their homes and heat a large building. So it is going to be successful. That's what they're planning. COP26 is taking place in Glasgow in the next few months, and I believe the Ofgem team want to make sure by that time they at least have 1 or 2 projects in place that they can wave the flag off and kickstart this new strategic innovative business fund scheme.
All right, Juliana, thank you so much. We'll certainly follow up and see how that is implemented. Thank you so much, and talk to you later on at 1:30 during Business Incorporated.
Thank you. Thanks, Ine.
So let's move over to the crypto market now, where Ladi is standing by. Ladi, what's going on in the market?
Well, the market is still ranging at this point. Bitcoin still, moving between $46,000 and $49,000, giving, chance for a couple of mid caps to actually shine this morning. Market cap $2.07 trillion is up about 0.13%. The volume is $106.41 billion, up 18% for the total crypto market. Bitcoin dominance still at 43%. Price of Bitcoin at 8 a.m., $47,096. It's down about 1.92%, given Ethereum time to shine this morning. Ethereum was trading at $3,233, up about 2%, but at this hour it's trading higher, up about 5%. 24-hour volume for Ethereum traded 19.27 billion, much higher than yesterday at this same time. Top votes by market cap, we have BNB there, down 3% at $458. Cardano, $2.74, still having that pullback, hitting the resistance of $2.90. It's down 2.98%. Doge is still stuck there at 27 cents, down 2.51%. And XRP is still above $1, but down 1.02%. Top 5 gainers there, we see a couple of double-digit gains with CeeLo there, up 63% at $6.65 per coin. Let's bring in Rume Ofina. Hello, Rume. Good morning.
Hello, Ravi. Good morning. Good morning.
Good morning. Great to have you, Rume. So we see the Cuban government is in the process of accepting and regulating cryptocurrencies. Aren't they going to be looking towards their own CBDC at this point?
Yes, government is the biggest corporation in the world. Everyone is trying to get their interest, but it doesn't stop the fact that what the people actually want some amount of independence in their transactions. For example, when you're using CBDC, it means the transaction data has to be stored somewhere. It's a centralized system, and people will not be comfortable with it. But that is not to say that Cuba is actually having a very strong economy, because there's been unrest at some point in time, and the people are actually resorting to using cryptocurrency. And the government of the world should be worried that the government should be worried that the top 10 most used cryptocurrency countries in the world, except the US, have one thing in common, which is poverty. And they are all going into it genuinely to see how far they could solve their problems themselves.
All right, so I see Ethereum is looking quite strong this morning. What's driving sentiment?
All right, for now, Ethereum is going higher. They have some challenges though, but it's no longer news that the Ethereum active address balance has actually surged to about $607 million. And the fact that the crypto market saw the second week of inflows in and out last week and probably this week of about $24 million, despite Bitcoin outflows about 3.8 million for some weeks now. It only shows that the hedge fund guys, the institutional investors, are actually getting more interest. According to Coin and Share, this is one of the digital market digital asset managers. It said that they are actually standing, all of them put together, standing about $56.8 billion worth of transactions, right? In digital assets, of which Ethereum is holding about 32%. So it's enough for Ethereum to, people are not wanting to sell again because they are seeing genuine value in all of these digital assets. And Ethereum is doing very well, despite the fact that next year they're going to launch 2.0 in 2020, which will solve scalability issues and high transaction issues, so it's going to do it. In fact, NASDAQ has said that they're the top performing assets on their list, and I think the best is yet to come. But others are still moving, like Solana, you can see something like crazy. Cardano is there, and Tron is coming, and a lot of these one protocols are going to do. I think Ofgems are going to lead the takeoff phase of the bull run, and it's going to be crazy,
I know, right? All right, roommate, thank you so much. Alt's looking really good. Thank you. Always great to talk to you.
All right, thank you very much.
All right, let's look at some NFT news now. We see that the Binance Smart Chain recently recognized Babi NFT as their spotlight. And, they also got that official liquidity listing on PancakeSwap. So a couple of NFTs looking good at this point. Let's look at the top 5 losers there. We have RAV there down 16%. It's not looking so bad, Ini. It's altcoins having a shine today.
Yeah, well, I guess sometimes the smaller guys have to also have the flow.
Exactly, all the mid-caps.
Anyway, that's it on the program today. Thank you so much for watching. I'm Ini John Rekwadi. Remember to join us at 1:30 for Business Incorporated.
I'm Ladi Williams. Thank you for watching.